All right, how about this? Joel coin. You haven't heard about it, I know, but new rule. If you want to talk to me, you have to use it. Yeah, I guess thinking about it, that might just make you not want to talk to me, wouldn't it? Which would be a bit of a shame. Binance, though, is actually doing something sort of similar, and it seems to think you're still going to want to talk to it. It's a pretty ballsy bet, to be honest, but it might just work. And it might also be good for everyone. Well, everyone that is, apart from Circle. We're talking, of course, about Binance's stablecoin BUSD and how it looks like the exchange wants to make that the only bet in town. Crucially, though, it's not taking on Tether yet. So we've got lots of questions about that. We're going to try and ask some of them on your behalf and figure out essentially what's going on here. We're also taking a quick look at that subject of the year, inflation. I know. You never get tired of hearing about it, do you? So, stablecoins. Honestly, is there anything less stable in crypto right now than trying to run one? As a consumer, it's hard to keep up sometimes, isn't it? But we have a fresh move that could ultimately prove to be very significant for the sector. Binance, which, in case you haven't noticed, is the world's largest crypto exchange, is shifting its policies on which stablecoins it's going to let you trade, and it's putting its own stablecoin, Binance USD, BUSD, at the forefront. From September the 26th, the exchange will automatically convert the rivals USDC, USDP, and TUSD into Binance USD, but that will be done on a one-to-one basis. So essentially the rivals will be converted automatically and worth the same amount. The pairs that those rivals were also trading on will now be stopped too. So let's recap quickly the current state of things and remind you of a few key elements to this story. So Binance currently trades about $76 billion every day. According to CoinMarketCap, something in the region of 90 million users globally use Binance. There's not much data for how much trade it does in stablecoins, but the total capitalization of the stablecoin market is around $153 million, around 60 billion of trade volume in that every day, as per CoinMarketCap data as well. It's fair to imagine much of that trade is done via Binance. So any move in how stablecoins are traded is ultimately going to be a very big deal for the wider market. Binance's stablecoin, BUSD, is the third largest by market cap at around $19 billion US. USDC by Circle is the second largest at $51 billion. USDT by Tether is meanwhile by far the largest at $67 billion. USDP and TUSD meanwhile are considerably smaller than all of those. So what is the point in doing all of this? Well, Binance have said that this is supposed to enhance liquidity and capital efficiency for its users. That's a quote, but there's still a lot of moving parts here. So let's get some detail on what those are from Forkast's Lachlan Keller, who's been reporting on this story. Lachlan, tell us what is essentially going on here.
Now, Circle's actually come out suggesting that Binance had already begun this transition process over the last 2 to 3 weeks or so. And there does seem to be some correlating data on-chain data showing that Binance's USDC's holdings had fallen over that time period, while conversely their BUSD had increased. A little bit difficult to confirm from just that. Of course, Binance has confirmed with us or commented with us saying that they reject this assertion and that no customer transfers have been made, nor will they until the time that they had said that that would take place later this month. It does, however, raise some concerns around antitrust issues with Binance being such a large competitor and preferencing their own stablecoin over another competitor's with just that outsized market influence they do have. However, could be quite difficult to confirm that in court, as they are far from, while they are the largest, far from the only competitor in the space. And so it really does raise some questions, but we'll definitely have to keep on watching to see how it all unfolds.
All right, Lachlan, thanks for that. So this does look like a potentially very big shakeup then for the stablecoin market, doesn't it? Is it a bad thing though? Or are there benefits that it could bring consumers like you and like me? Well, Ben Caselin is from crypto exchange AAX. He told us that Binance's move could ultimately actually help.
BUSD, or Binance US Dollar stablecoin, is a pretty solid stablecoin. It's held its ground throughout the volatile months that we've seen, that we have behind us. And so I think this move is just the next step. It will make a big difference. It will change. It will provide Binance with a lot more market share in the stablecoin market. It's one thing is remarkable. It's that USDT is not included in this kind of, as a candidate for removal. And I think that makes sense because USDT is still very much the dominant stablecoin, and it's incredibly important to the ecosystem. And secondly, I think, for this to really work to Binance's advantage is, and we'll probably see a lot of that, is partnerships with decentralized platforms and decentralized exchanges in DeFi, because a lot of products, a lot of yield products and pools and trading pairs in the decentralized exchange kind of world is very much USDC, USDT kind of based. So I think for Binance US Dollar, that would be the next step after really, clamping down on their own platform.
Look, there are still big questions about what all of this could mean. As you heard Ben talking about there, Binance hasn't decided to take on Tether yet, likely because of its size. Tether is by far the most traded crypto asset by volume, changing hands more often than even Bitcoin. There had been some speculation that USDC might at one point overtake Tether, but Binance might just have scuppered that potential completely with this latest move. The bottom line in all of this, though, comes back to the principles of a free market, which is, after all, a key tenet of crypto, isn't it? While choice is ultimately a good thing, consolidation can also be a big component of that free market. And Binance have just tried to ensure things consolidate around their stablecoin and not others. Things shifting for stablecoins then, inflation of course casting its own huge shadow across crypto and the global economy in general, with worries about it gripping markets and consumers alike. What is ahead for digital assets? That is a question we come back to time and again, isn't it? Well, Damien Lowe of Matrix Asset Management is going to help us try and answer a little bit of that right now. He's here with us. Damien, listen, Goldman Sachs just warned that inflation in the UK could jump to 22% next year, a staggering number. It is jumping everywhere though. How do we position ourselves as crypto traders in the midst of all of this?
I think digital assets are definitely an inflation hedge on the long term. I think in the shorter term, just like all assets, it will start to get depressed as central banks hike around the world. Inflation is here to stay, so central banks will definitely be hiking at least for the next foreseeable future. Why inflation is here to persist is because the systemic factors of like energy, food, and just wage inflation overall is causing it to stay for the near term. And there's nothing the central banks can do in the short term except to hike rates to assuage those effects.
And liquidity, of course, the other side of this worry as well. Rising interest rates likely to hopefully combat inflation, but also going to be sucking money out of the system as a result. That will hit asset values. Where do Bitcoin and Ethereum fit into that?
So I think there are definitely inflation hedges in the long term, and the big reason for that is that you can anticipate their supply by looking at how they were programmed or designed. That's not the case for dollar fiat, and I think while it looks very fine and dandy now for dollar fiat, the paradigm shift when it switches, when people lose trust in it and decide to go for other assets overall, will happen fast and furious. The merge is something that helps overall Ethereum. I think there was some kind of scalability issues, and for it to really be its objective of the world computer, this is a first step, but it's definitely not the end step. There's a lot of steps on the way. But I think given how it's been very cooperative, there's a foundation behind it, and it's really taking it to levels to get it to the next level where everybody and anybody can use it without crazy gas fees is a right step in the right direction for me.
And Damien, what are the other downside risks that you are building into your models then?
So I think it's it's the same boogeyman, but I think with different drivers. So what I mean by that is natural gas pipeline from Russia has been switched off, and that's really going to affect Europe, especially when winter comes. So inflation might actually spike even more. So it's more of the same thing, but in a bigger magnitude. So that's really going to hurt markets, I feel. OPEC has also decided to curb limits on or actually increase their production overall. So that's gonna hurt things as well, overall in inflation land. The other thing is that a lot of people have priced in that the Fed would be dovish, but we've seen already in Jackson Hole that they didn't want to give the markets that kind of perception, and I think they're gonna keep driving that in because it's not fully priced in that the central banks are more hawkish than markets had hoped for them to be. So I think that's further downside risk to watch out for overall.
All right, Damien, thanks so much for that. Damien Lowe from Matrix Asset Management. That is it from us for this episode. Like and subscribe to this video for more content like it, and let us know your thoughts on what's happening in the comments.